thank you, Rian, and thanks you for all the students of DCT. It's very nice to have you here. It gives me great pleasure. I'm very excited about this topic. So I would like to introduce the three esteemed panel, and with no specific order. So first one is Daniel Radansky. Thank you very much for coming here and flying over overnight. Prashant Kalanji, thank you very much. And Dilip Benwani. You are the only one that didn't fly, so for you was much easier. So we have a very exciting topic. The more we have been talking about it, the more it has built inside me. Like there were moments in which I woke up at night and says, "This is amazing." So I hope we will be able to transmit to you the same amount of excitement that we all had. We only have 26 minutes, so we have to be extremely time condensed. So the first thing is in terms of intro. Can you, maybe it's for you, Prashant, can you give us a little bit of an overview, intro, what's happening in terms of tokenization landscape globally and in the UAE?
Yes. Hey everyone, good afternoon. This is Prashant Kalangi, founder and CEO of a company called Zonix. We are a Silicon Valley-based company in Menlo Park. So tokenization has taken this year, from a market cap point of view, it was right now, I think if the number is right, it's crossed about $50 billion in the entire value of the tokenization. And the estimation is by 2030, it's going to go about $3 trillion by BCG, by Deloitte, and other groups. So tokenization essentially means really you put the real asset onto digital ledger technology called blockchain that allows people to see and invest in a more transparent and trusted manner. That's what essentially tokenization means. And we have seen huge growth in US because of regulation clarity, and in this region of Middle East, where UAE, WARA, and the DIFC and ADGM have completely given the regulation clarity, and the laws and the compliance are fully in place. So when it comes to real estate and hospitality and properties, this region is phenomenally picking up, unlike last year. So this year alone, there is a company called, a live example that I can give. There's a builder, property developer called Demac. They have launched a app called Pripco, where people can buy direct property tokenization. And there are also other companies that are coming and then doing fund tokenization, where you can divide a fund into digital shares and allow people to buy the fund shares. And the fund can deploy the money into real estate projects or casinos or hospitality industry. So Zonix, we have signed up 2 projects here, one in Ras Al Khaimah, that's actually doing a casino project, and the other one is a family office fund, that is a large one in Dubai. And both are going to be regulated and monitored under WARA and DIFC. So this is not any experimental anymore, it became mainstream. And in US, the Genius Act, the Clarity Act, every regulation is opening up the doors for it. So this will enable people to do the traditional finance in the digital way, meaning you can buy the shares like an LP and a GP structure, and where people can buy these shares as a primary subscription, they also can hold on to it. They get based on the structure, you can get the equity, you can also get the dividend, you can get the yield, and then you can also have a liquidity where you can exit and trade. So there are multiple venues doing it. And with the AED stablecoin, digital AED coming in this region, and this is taking more prominence than before. So most of the transactions will be happening in digital AED against digital dirham in this region. So that's pegged for this one. So I would say this has taken a phenomenal shape, and it is only the journey just started, because it's going to take off like very much.
I think if there is a place in the world where this dream can actually become true, it's probably Dubai. We have all the ingredients, we have the growth story, we have the regulation, we have the platform. You're just missing you guys, and then we are ready to start. Dilip, so for you, what do you think are the advantages of tokenizations when it comes to this type of investment?
Sure. Good afternoon, all. When you talk about the advantages of tokenization, I think it impacts both the investors and the asset holders. One of the key ones is to increase liquidity. You can very easily raise capital, especially if you're working in an illiquid environment. putting tokenization on digital platforms enables you to access a global pool of investors who can now go in and invest on different asset classes, whether you're residential, whether you're prime properties, commercial units, hotels. You're basically lowering the barrier of entry for these investors because traditionally these real estates are really expensive. What you're doing with tokenization is making it affordable by selling a fraction of those units. One of the other things, especially when you talk about hospitality or the hotel industries, it's easier for these guys to raise capital for financing refurbishments, expansions, or even construction of the hotel. And they can do all of this without the need of selling full ownership in the property. As you rightly pointed out, right, UAE real estate and Dubai is still very prime for overseas investors. Overseas investors who are keen to invest in this market without the complexity of owning and maintaining a physical asset. And I think tokenization and the innovation around it massively supports and encourages them to come and invest in this region. Another plus is the speed at which these transactions can be carried out. Right? Traditionally, it will take between weeks or up to months for a real estate transaction to complete. With tokenization and a whole digital life cycle, you can, digitally onboard your customers with KYC, MLL, AML, and all the checks powered by digital wallets, with cryptocurrencies and direct payments. You can really close a transaction within minutes. And I think that's a very massive opportunity and plus point in this journey. And finally, with blockchain at the end of the day, right, that really secures your transactions, has an entire ledger of ownership of who and when has transacted it, and can even record your revenue distribution that comes from these assets. Each one of those are securely there, traceable, and tamper-proof. And I think that transparency massively helps in getting this solution out to people.
Yeah, and I think there is a massive increase of trust because of the use of blockchain, because of the democratization of the ownership that really triggers certain investors that at the moment are not active because of the ticket price. So Daniel, specifically in your case, if you were to do a tokenization structure, how would that work? How would you structure it?
Yeah, hello everyone, Daniel, co-founder and CEO of Stacks. We are operating a marketplace for tokenized real estate. So I will, after the introduction to what we actually talk about here, I give you some insights into the practice, how it works. So in general, there are two ways how tokenization is working right now in the market. So the way number one is we create financial products. So normally we do this by providing loan structures, private debt, private credit to a real estate development company or real estate holding company. And those loan structures are then securitized, which means we use the entity which is providing the loan, which is issuing a token to finance that loan. And with the help of these investment tokens, you finance that loan. And these investment tokens are regarded as securities, therefore the name securitization. And that is helping to now address investors in different markets. So we are like, for instance, in a global marketplace where we are pooling capital from investors from multiple markets. But we're not working alone. We work also with like distribution partners in different markets like Singapore, here in Dubai, in the US also, in South America, and so on. So once we have a project tokenized, created a security token for that, we can list a security token on multiple marketplaces, giving access to investors from multiple jurisdictions under current regulatory regime. So it's important that everything is compliant, because only then we can pool sufficient amounts of capital for those larger scale real estate investments. So when we look at the second option, the real estate tokenization, direct tokenization, tokens in general, there are several ways which are regulated and unregulated. But when we look here, especially in Dubai, we see what will happen next. What will happen next is what we're also working on in other countries is tokenizing the land registry. So this means that the real estate is tokenized from the real estate title to then in the end where the investor will hold the asset. So when we tokenize the real estate title, it means that the title itself is living on the blockchain. When it's an entry point into the blockchain, you can transact the real estate title peer-to-peer within seconds. So the transaction of the real estate title can now happen without any intermediaries, completely trustworthy, completely regulated, and completely digital. So no matter where the investors are sitting, whether they're in Singapore or somewhere closer to my home in Frankfurt, then they can transact a real estate title of a real estate here in Dubai within seconds. That's completely new. There are no intermediaries. And and how this is working, they are basically settling a digital currency, like Prashant has explained, digital AED, digital US dollars, stable coins, or central bank currencies for this real estate title. So the whole transactions is built on digital rails. So when we look further to the future, we see that this land registry tokenization will also enable digital services like what Cavendish is offering, digital data analytics, in order to understand that investment in general, what is the value of it, how we can generate value, how is it managed. So for the real estate industry, this also will have certain applications. For instance, that the asset management will become much more important, that the brand will become much more important, because the brand provides the reputation. We provide the technology. We provide that everything is working, but somebody needs to generate the returns, similar like in the fund industry, and that's the face of the product in the end. The face of the product will be you here in the audience, who will manage the asset, who will represent the asset, who will generate the profits for investors.
Yeah, I think also during the preparation for the call, we discussed that there will be different type of investor. You might have more of a lifestyle retail investors and an institutional investor. So you can literally tokenize your product to appeal to different markets. I don't know if you want to touch base on the lifestyle and what would be the perks.
Sure. So what we refer to as lifestyle, we have already in place right now. One of the oldest digital currencies is what everybody's using here, frequent flyer miles. So you can now transact frequent flyer miles for luggage, for some shoes or whatever. But when we look at it now from a hotel perspective, they give out free drinks at the bar, maybe a free stay when you stay 10 days or something like that. There are always some perks attached to it. But when you now become a lifestyle investor, you want to have something attached to the investment token itself, or the other way around. Having a lifestyle, like staying in a hotel brand, enables you to become shareholder of the specific asset. Everything digitally, everything automated with the help of tokenization and digital connections with the blockchain industry. So lifestyle investors can now invest into the investment, like in hotel investment, the hotel as an asset, but also generate additional benefits by holding the investment token, and in addition to this investment token attached, a lifestyle token, a token which is like a branded token of this company representing the membership.
Yeah, I think the beauty part of it is that at the moment, if you want to sell an hotel, you can only find an investors for the entire building and for the entire ticket price. With a tokenization, not only you fragment the ticket into smaller tickets, but you also can appeal to institutional investors that are all money related. They want to have a 5% return, a 8% return, a 10% return, but also to a lifestyle investors. And that sort of a piggy bank with the loyalty programs of the operator. Because the moment, I'm just inventing, a Ritz-Carlton is for sale, you can launch the token by invitation only to all the Ritz-Carlton loyal members. Do you want to own a Ritz-Carlton for $5,000? And there is no return on investment. You only get a free drink and you get called by name when you check in. That's good enough for an investors for that type. So in a way, it also maximizes the value at sale for your asset if you calibrate in the right level.
I just want to add, right? That's a true reward to a loyal customer that's been sticking to a brand, right? Not just a free coupon that gives you a drink at the bar, right? And then you want to offer something back to the community that's been like sticking with you. and then that's a definitely a biggest benefit for lifestyle.
That somehow brings to the next topic. As a former hotel certified valuer, I would say, how would you value? What would be the implication on feasibility and valuation for an hotel under a tokenized ownership structure? Why do you see it, Dilip, from Cavendish? You know, you know this on a daily basis. So how would you structure that different? What do you think would be the challenges?
I think this is where a valuation company like Cavendish Maxwell can bring in, and should be part of bringing in a sense of credibility and trust in this entire ecosystem. All right, it's having that asset valued from the very beginning, being aware of priority or tokens that have been offered as part of the deal, and I'm sure the much more qualified surveyors will use these when they're doing their evaluations, and whether they're doing their cash flows and OPEX and so on. They would use these measures to get what I would say is a qualified valuation on the asset from day one, which is what I think should be visible for any investors in the platform. That makes it very transparent on the different types of tokens that are available to purchase, the value behind it that we are putting on top of the asset, which will form the base of the token that's going to get exchanged. And not only at the beginning, but continuously valuing it over a period of time to ensure the value does retain. If you are changing an operator, that might have an impact on the value. So getting that in terms of exposure to all the investors through the platform, digitally integrated, is going to be one of the key for success.
I think one of the points that emerged very clearly during the preparation for this panel is that through tokenizations, there is more need for professionality. So you need to have a new service line at Cavendish Maxwell says we help you tokenize your asset to maximize your value. But we also are expert in valuing tokenized assets because there are different cost structure, there are different, the cost of capital might be different, so there are some nuances that you need to take care as a sort of a special assumptions within the RICS regulations.
And it's also a rise of, what we said would be digital asset managers, right? Because this is moving away from the traditional way, and this is completely fully digital. You're using tokens, you're using crypto, you're getting it valued that it's available on the platform for all your investors. So you need digital savvy asset managers maintaining those assets.
Yeah, something that I was very happy about as an asset manager is that the need for asset manager will become more and more valuable. We will become a more fund manager because when you have a fractionized ownership, nobody can take decisions. So you're more empowered in taking strategic decisions like operator change, changing of contract or refurbishment. So from that perspective, the need for professional asset management is definitely going to be on the rise up. So hopefully I will have a better future then. Now, I just want to piggyback on the fact that the UAE will also have the privilege of having His Excellency Sheikh Al Noasis sitting as the new Secretary General of the UN World Tourism Organization. So do you think that tokenization could also be an instrument for developing countries or assets in developing countries to attract capital that at the moment they're not able to reach? What would be your point of view, and if you have some examples?
Absolutely. I think we have seen good growth, I would say, in Africa, some parts of Africa, especially in Lagos. We have seen in Kingston, and then in Republic of Congo. So they're all coming up with very large tourism-focused, hospitality-focused industries, and then like this, launching big projects. And with the, I think she's going to be confirmed in November, I think, right? I think with Her Excellency being part of this. I also happened to watch her speech 2 hours ago, and she brought this point, like she said, she's working on 5 pillars. One is sustainability, right? The other one is inclusivity, and then she said people really, they have the passion in Africa, all of them. They are really true leaders and champions of their countries. They promote it really well, and we just need to guide them And there is huge. I'm a firm believer in the continent Africa. There's a huge, down the line, next 10 years is going to be Africa, in my opinion, personally as well. And we have done, Zonix has done 2 projects, one in Kingston, we have tokenized villas, and in Nigeria also with our partner in US, we have done like a commercial property in there. And even the stock exchange of Nigeria allows the tokenized assets to be listed on there. That's a regulation clarity is there. And to answer your question, I cannot predict how much it's going to be, but it's a phenomenal growth that's going to happen. And with the cross-border transactions becoming very easy with the digital currency coming in, so the settlements times are also reduced quite a bit. It used to be like 4 days or 2 weeks or 3 weeks before, but now it's instantaneously. So with the blockchain technology, the advantage you get is that you can settle transactions instantaneously. You can capture investor data instantaneously. You can open markets completely which you have not opened before. There are projects that are very creative, as before you're saying, right? So there's something called dual token economy, which we call in our technical language, meaning like you are an investor in a project, could be hospitality, could be anything, and you're also beneficiary being an investor, not just from returns of the financial product, but also being the privileged beneficiary because you invested in that project. So, and the APAC region and the Africa region is going to blow up.
Yeah, I fully agree. I think that the tokenization will make also the democratization of funding much easier. And if you build on that, how many expats are still in love with their countries and they want to help, and the moment you offer a product where they can buy a little bit of that success, that also going to be a no-brainer for certain nationalities abroad. So that one is great. I think one topic that we have not touched enough is probably the usage of a token as a collateral. So the moment I own a token, big or small, but that token is generating a cash flow or as a certain value, I can still use it as a collateral for another investment. So that unlocks a certain amount of possibilities that at the moment in financing are not applicable. So I usually get a finance from a bank, but the bank doesn't use that as a collateral for anything else. Here you have a secondary market and a tertiary market and a 4-level market, and therefore that increases the multiplier of the use of the same value of the coin.
Yeah, so I mean, in traditional world today, so you have a GP LP structure. So you're an LP, you're a limited partner, you invested in a certain project, and you have an equity in the project. You're also getting some yield or a coupon that you're getting every month or every quarter, right? You're enjoying it, but now you're in need of cash in an emergency situation, right? Today, you cannot take that LP share that you own in that project and then borrow money against it. It's impossible. It's not there. And then you have to go to the GP, and even for you to sell your LP share, there's no liquidity. There's no instant one that's buying, right? You have to go and then ask the GP or the co-GP, hey, I want to exit. How do I get it? Or I want to borrow money against it. How do I get it, right? It's not there. But the tokenization, since this is digitally transacted and it's digitally maintained, so there's on the other side, there's a guy who trusts his data because the data is supplied by Cavendish Maxwell as a validator. A digital asset validator is emerging, and he says, okay, yeah, this token has this value of market today, and against that I can get a 60% or 70% LTV, and someone is willing to pay me on a Bitcoin or on a digital AED, dirham. So which is the lending and borrowing collateralization is instantly possible with this, and there are marketplaces just do this only today.
I'm launching a new term, multi-level tokenization leverage.
I love it. Yeah, let's do it. Let's patent that. Multi-level
Tokenization leverage. Because you can re-leverage the same token multiple times at 60% ratio,
so
and you multiply your investment.
In technical language, in our language, Web3, we call it staking. That's called staking. So you stake your token, restake it, stake it, and restake it.
That's perfect. So they always ask me to leave at least 2 or 3 minutes for questions. I know it's a very technical but extremely interesting topic, so I want to leave the floor for maybe we have time for one question. Anybody from the audience? Okay, it seems like sorry.
First of all, thank you very much for the insightful discussion. I want to build on the idea of having the tokenization as a way for retailers to access exposure to the real estate market. And my question is, for someone, for example, in Dubai that want exposure to residential real estate or commercial real estate, how will it be better to go through tokenized instrument that typically are backed by a single asset, as opposed to a REIT structure such as Dubai Residential or TCOM for the industrial space and other funds that are coming up?
So I get this question quite a lot because it's always REITs are seen as liquid assets and tokenization are seen as liquid assets. But when we look at REITs, you can buy into a specific portfolio, whereas with tokenization, you can build your own portfolio. So you, as an investor, you can customize what you buy into. You don't get it pre-configured for you. So you can really customize your complete investment portfolio, and that's where we're heading also, like what we explained today with this collateral, use of those investment tokens as collateral. So you have more than just investment. You can use it as a source of money, which you can do or use for different purposes just beyond the investment purpose. But when we look at REITs, it's really that also tapping into the last point, not everybody has the access to all REITs via the banking infrastructure. So when you want to have a Japanese REIT, it's very difficult to get this over your bank. But when you have a tokenized asset, you can come to my marketplace and buy it there within minutes. So there's a difference, the accessibility, what the kind of product it is in general, and what you can do then with this investment later on. So everything is beneficial for tokenization over REITs. But we also need to say that REITs are already more established, are also in a capital market infrastructure which is regulated. But tokenization overall has benefits, so we think, or I'm a big believer, of course, that it will replace REITs very, very soon.
I guess you're more in charge of your destiny. You choose the proportion of capital that you will invest in you allocate your own capital. So during my previous panel, which was about hotel investment, I asked the audience, have you your wallet ready to buy an hotel? Yeah. Now I need to ask a different question. Do you have your digital wallet ready to buy a token in a hotel?
I just want to add one last thing, Giuliano. So just to your point, right? Just imagine like in 2008, when the Bitcoin market came, right? It was like, I think like hardly $10 million. People didn't even know. So today the entire digital asset market, whatever, crypto plus stable coins plus everything, right, is about close to $4 trillion. Still a small drop in the biggest market of $600 trillion economy, right? So this has gone up, if you see in the last 24 months, right? The cycles are like hockey sticks. And with every sovereign, every country coming with a stable coin, all the people who are in crypto with the monies, they're looking for these products, stable products that are real products for them to deploy the capital which is already on the chain, on the blockchain, right? So all of them are interested to buy a good yielding products, financial products that are like hospitality, real estate.
Casinos, whatnot, he said.
So whatnot. So I think that is where this is going to go. And then in the next 2 years, this is going to be like, it's already shooting up. I think like people who are not looking into this, I encourage all of you just like spend some time. Please look into this because this is not if, this is when, and it's inevitable.
As we mentioned at the beginning of the panel, this is a topic that really grows inside you. And as I mentioned, I found myself waking up at night thinking like, oh, there is an implication like this on this topic. So if this is the impact that you will have in the next 2 weeks, it means we have done a good job. Thank you. Thank you all so much for attending. And we will also see you tomorrow.